Hello and welcome to this new blog post from the Sustainability Accounting series. As usual, our disclaimer. And what we want to investigate today is the operational budgeting process with sustainability factors. In the previous post, I already showed you this graphic that is taken from Accounting for Sustainability from this site. And we had a look at ring fencing and allocations as approaches to implement sustainability factors or ideas into the operational budgeting process. So here again a short review. Ring fencing is basically money set aside for specific purposes related to sustainability. On the right hand side, we have allocations. So once you set aside a specific money, then you also have to tell the people who gets the money. And that's the reason why we investigated both approaches together. In today's blog post, we would like to have a look at capitals budgeting and shadow pricing. And when I say capital or capitals budgeting, then I mean natural, human and social capital in non-monetary terms. Well, there will also be money always around, but the focus here is on non-monetary elements. And when you bring shadow pricing, or maybe there's a market price, when you bring the pricing in, then it becomes a normal budget amount. So here are some examples: water, electricity budgets, examples of this capitals budgeting. But for these, we have actually a market price. Usually when you get water, there's a market price. You get an invoice from the community or from a water supply company, where you just pay something. So in this blog post, I would like to focus on these elements, specifically do some examples on water pricing, where we actually have a market price. In the next blog post, I would like to dig deeper and have a look at how can we deal with capitals or elements where we do not have a market price and where we need to implement shadow pricing. Okay, but now let's have a look at this approach, capital budgeting and shadow pricing. And here again the summary of what we did in the previous post and what we are going to investigate in this one. So the second approach that we want to focus on is this capitals budgeting and shadow pricing, and specifically here this capitals budgeting. And the example that I have for you is basically a water budget. And what we are doing in the following is we use a service item to create a supply forecast, transfer the supply forecast into our ledger budget, review and complete it, and then we record an invoice against it, and then do an actual budget comparison. And that's what I want to show you in my demo system. Okay, I am now in my DEMF Microsoft Controller demo company, and what I opened for you is the release product details form, where I created two products. And in this first part, the focus is on the first product that I call W1, which is basically fresh water. And the important thing is that this is a service item. The second example will be based on the stock product W2. But let's have a look at the service item and what I did. So basically I created a supply forecast for the different months. And what we would like to focus on in the following is March. Because I did already some examples, some testing and some recordings. And for March, I have no transaction recorded in my system. So what I did is I planned here that I will use 10,000 cubic meters of water. And the market price that we have here is approximately 2.5 euro per cubic meter. So that's what I know and what I planned here. So it's pretty easy. And once this is done, what I can do is there's a functionality in the inventory management module that says purchase budget to ledger. So here I say on top, I select the budget model the operational budget model for next year. And then I have here a filter for this item and for this period. If I hit OK here, what will happen is in my budgeting module, I will see a budget register entry. So it's called supply forecast. It's a draft. If we open that one, you can see it's for March 2021. And what you also can see is that I set up this item with a specific item group. It's a financial dimension called water supply, so that I can easily identify what has been budgeted and what has been consumed later on. Yeah? So what we get transferred here is the amount, 25,000, and if we scroll down, the quantity. Yeah? So what the job here of the accountants is basically reviewing this and then update the budget balances. And updating this basically means that you fix this amount, it's basically kind of approved, and that it cannot be changed anymore. Of course, if you like, you can have a workflow associated with this process, but I just said, okay, I want to have this completed and then go on and record my actual transactions. So, and that's what we are going to do next. So I'm going to accounts payable and I'm just creating a new invoice. So let's do that. Let's record a new invoice. I use a vendor invoice water 3/2021. And the important thing is that I post this into the correct period. So let's set the invoice and posting date to March 2021. And now if I open the drop down, you can see that I only have the service item available, not the stocked item. And let's say we consumed 8,000 cubic meters for 4 euros in this case. So we spent 32,000 euros, which is more than we actually budgeted. But from a consumption perspective, we used less water, but because of market price fluctuations, we have to pay a higher price. Okay, now let's post this invoice and then have a look at the actual budget comparison that we can do in the budgeting module. So we go here in budgeting and then we see actual versus budget. And here I created a financial dimension set. I call this item group. Yeah, that's here. Let's select the budget model and then I have to select the period. So which is March 2021. So let's select this one. So 1st March, and then we have here 31st of March. And if we say apply parameters, then we should see a comparison of the actual and budget amounts. Okay, so the actual is not transferred to GL in this machine. Let's do that quickly and control that. So where we do have that subledger entries, yeah, still pending there. So we transfer it now and let's do the comparison once again. So we have here the item group, this model, then we have here the months that we want to investigate, and now we should see the difference. Okay, so we can see we budgeted 25,000, the actual consumption is 32,000, which gives a variance of 7,000. And if you just look on this form only, this looks bad. Yeah, we consumed more than what we budgeted for. But actually, if you remember, we used less. But that's something you can also not easily identify this with other reports, for example, the financial reporter. And the reason for that is simple, because if you go to the open vendor invoices and then have a look at the invoice that we recorded, I hope I can find it. Yeah, and if we have a look at the voucher, then you will see what is actually the issue. Because what happens here is that we just get a financial voucher generated, but this voucher does not give us details about the quantity. So here, if you look at the general tab, the quantity is 0. And therefore, because of this kind of lag in the GL voucher, we cannot really have a good comparison. Yeah, for example, in the financial reporter or in this budgeting module. But there's a way how to fix this, and I want to show you this first on the PowerPoint and then in form of another example. So let's go back to my PowerPoint and have a look at how you can configure Dynamics to get a quantity-based variance analysis. Okay, after this short demo, first a short summary of the advantages and disadvantages of the approach that I introduced here. So on the left hand side we see the advantages. That is basically an easy process for recording the invoices. So you do not need a purchase order to record the invoice. It's easy, straightforward, simple. On the other hand side, what you need to identify these actual and budget amounts clearly is you need a special account or financial dimension for this actual budget comparison. And the main disadvantage is that you see only a total variance. So you cannot split up the total variance into a quantity-based and price-based variance. So here's another example. I will not dig into this because it just uses different figures and gives you this variance here. And that's actually the disadvantage that we want to overcome in the next example. So let's jump to the next example where I used a stocked item. So that's the main difference. And what I'm doing in the following is I create a supply forecast. Then I record the actuals, and then I record or analyze the actual and budget amounts. So what I do not need in the following is a transfer to the purchasing budget and this budget register entry. So that's optional, and that's probably what will be done. Yeah, I mean, if I plan for a specific supply that I need and transfer it to the budget, then I will need that one probably also in my finance records. But that's not what we need here for this analysis. And that's what I want to show you in the following. Okay, I'm back in the DEMF demo company. And what we are going to do in the following is we will do some transactions with the second item, W2, which is basically representing water, fresh water supply. But this time the difference is that this is a stock product. But from a supply perspective, I'm doing the same. So let's say, so that you can see the difference, 10,100 cubic meters. This is what we planned. And because I know that I will pay roughly 2.5 per cubic meter, I can calculate the price. Now the difference is that I will not transfer this supply forecast to my budget. But what I'm doing instead is I will create a purchase order. Okay, let us create this purchase order. And I use this vendor here. And here in the lines, I just enter my item. And let's say we consumed 8,900 cubic meters. And the price was, let's say, 3.75, which gives this net amount that we have to pay. So then let's confirm this purchase order and then post the invoice. Okay. Now, when I post the invoice, I have to be careful that I choose the correct period. So invoice 3/3/21. So this is important that I post into the correct period, because otherwise we will not see this comparison. So here I just use these elements. I do not post a packing slip or something. I just create this invoice and say post. And then the next step is to analyze the variance. And this time we are not using the budgeting module for that, but we rather use an electronic report that I just created for that. And the electronic report is basically a simple, it's a very simple one. It makes basically a use of two tables, basically of the inventory transactions. So that's the report. It just holds a couple of data. And when we run it, you will see the tables that I used. So the first one is the supply forecast, where I filter here for stocked items and items that belong to this item group. So that's not a financial dimension, that's the item group that I assigned. And what I have to change here is I have to change here the period, because that's March. February was the period in my previous example. So let's copy that. And the same has to be applied for the inventory transactions. But as you know, what I'm doing here can be done by dynamic filters. Yeah? You can say, give me this report for a specific date range, and then you just need to run this report on a regular basis. And if I did things correctly, then we can see what was consumed. So starting from the left, we can see our item, the period, and this was the quantity budgeted, the price budgeted, and the amount budgeted. And then in the budgeting module, we just compared the budget amount with the actual amount, giving us this variance. But then we said, hey, that's not correct. Why? Because first of all, we consumed less than we budgeted, which is a good thing from this sustainability perspective, because that's what we want to achieve. On the other hand side, the price increased, and that's something I cannot directly influence, because if my water supplier says, okay, we increase the price, there's not much that I can do except trying to reduce the consumption. But the main point here is this variance. So now the difference between actual and budget gives this total variance, and now we split it up. We say, okay, the quantity variance and the price variance, they make up the total variance, and this gives us an insight into who is responsible. So basically, a negative quantity variance in this example says, okay, hey, we reduced our consumption, which is good. On the other hand side, we have a price variance because of the increase, which is not really the responsibility of our plant managers or something. Okay, so this was the second example that I wanted to share with you. Let's now go back to the PowerPoint where I want to show you some additional details and give you an outlook what we are going to do in the next blog post. So after this second demo, let's have a look at the advantages and disadvantages of this second approach. So on the left hand side, first the advantages, which are basically the ability to do a detailed analysis of the planned and actual consumption of our water supply, and the ability to identify price and quantity based variances, and basically to tell who is responsible for this variance. On the right hand side, you see the disadvantages, which is basically you need a purchase order. You cannot just create a pending vendor invoice and select an item. And the other thing is you need an electronic report or a Power BI report that you create. So here's another example, which basically shows you the same with some different numbers. So on the left hand side, we see the item, the budget, quantity, price, and amount. And then we have the actual quantity, price, and amount. And then the important thing is here the last three columns where we split up the total variance in the quantity and price variance. Okay, so a quick summary. What we investigated today. First of all, we were focusing on a natural resource, water. And in this case, we had a market price. It was an estimate, but we had, you can get one. Then the important thing was here that the use of a stock product gave us these additional insights that we needed because of the inventory transactions that are related with this item. And the budgeting module was not really needed to do this variance analysis. It's still useful, because the finance people and your auditors might want to see this budget. But for doing this comparison of the water consumption, it's not absolutely necessary. Okay, so what's next? So in the next blog post, I would like to show you a similar example, but where we do not have a market price. Because in this case, with the water, we could guess what is the market price, and we can also forecast it probably if we get some messages from our water supply. But the next blog post will focus on situations or elements where we do not have this price. And then the question is, how can we deal with this kind of elements in our operational budget? So this will be part of the next blog post. But for today, I would like to thank you very much for your attention and look forward to seeing you in the next webcast.